China does have tools it can use against the United States. According to the Wall Street Journal, the escalating trade conflict between the United States and China has reignited fears that Beijing could use financial markets to hit back at Washington. China is one of the largest overseas owners of U.S. government debt. There have long been fears that China could dump U.S. treasuries that make up a large chunk of its foreign exchange reserves. China owned about $1.2 trillion in U.S. Treasury securities in January. But they might be able to actually own more because they have third parties that are buying them and all the rest. U.S. government data showed China owned about $761 billion of treasuries as of January, trailing only Japan. That data covers treasuries held by both the government and private investors. Some have speculated about whether China was behind this week's treasury sell-off. Goldman Sachs said that they were skeptical of that, but China could also use its currency. They could devalue the yuan to help offset the impact of tariffs. The yuan's value is tightly controlled by the central bank. Investors have watched the daily fix. They could be subsidizing their domestic industries. There's a bunch of stuff that China could try to do. All of it would hurt China. The real question is there an off-ramp here for China that forces them to, for example, abide by IP regulations? Is there some sort of goal that the United States is attempting to implement with regard to China? Can we isolate China without actually provoking them into doing the biggest thing, which would be blockading Taiwan? So one of the things that we do have to watch out for with regard to China is, let's say we go to 125% tariffs, which we have on China, and let's say we maintain those.